Are you going to leave the door open?
I'm going to leave the door open.
Oh, he's going for it.
Welcome to Silicon Valley Impact, where business insight meets startup innovation. Brought to you live from Silicon Valley, California. Please give a warm welcome to your host, Brian Sparks.
And hang time. Brian, you caught me off guard. I wasn't ready, Brian.
You're dilly-dallying, and I'm just like, let's do this, man. We're going.
I'm
doing the show.
I love it. I appreciate you just,
Yeah, well, because you spun in like 1,000 different directions at once. But you know what, Brian? You know what I say? I say within your own.
Within your own, yes.
Yeah, within your own, Brian.
I love it.
Okay.
All right. I'm scurrying to pull up the show notes. We got Tess here. We're having a great conversation. I made the mistake, like, let's just say go, and you actually took me literally.
Yeah. No, because you guys are doing the show before the show. You know I hate that. I hate the show before the show.
Yeah, and it got good. So
right, and it started cranking up, and right, exactly. What are you going to do? You going to start the show? Is there a preamble? Do we want to get any information? No housekeeping?
No, we're here.
All right, here we go.
Can you turn my mic up a little bit while we're in there?
I think what you mean is this. So yes, they're done.
There. Okay, thank you.
Is that better?
All right. Well, Brian, it's good to see you. Good to see that you have the boot off.
Yeah, indeed, I have the boot off.
Yeah.
Well, now you want to talk. I see.
Yeah, well, now I want to talk.
Now you want to chat. Before it was, let's get going.
Our audience wants to know, when you got the boot off.
Well, today's really my first day out in the wild without the boot.
Okay.
Yeah, and I'm feeling a little more pain than I wish I was feeling, honestly. And so, which, you know what that means, of course. What does that mean, Brian?
Well, that means you haven't been using it for a while. And for those of you who are in our Silicon Valley Impact world, if you've ever had a cast taken off or taken out of some sort of boot, there's going to be some growing pains.
Yeah,
and Brian, you're
there's
going
a little
through
atrophy, but that's not. And I guess to some degree that's what I mean. But really, what I mean is that it's probably a longer distance from here till pickleball than I was expecting.
Okay. Well.
Yeah, that's all I really care about.
Wait, but did you get the injury in pickleball?
No.
Oh, okay.
No, but I did, however, go. I rode my motorcycle about 120 miles on Saturday, which that's good news.
Oh, you mean like distance, not speed?
Both.
Yeah.
Shoot.
Brian, are you getting a phone call?
You really don't want to hear this. This is not going to be interesting at all. I'm going to let it go to voicemail.
All right.
I feel so embarrassed. Can you see how red I am right now?
Tess, we have a general rule in the show that if your phone goes off, you have to answer it.
Oh my God. Everybody would be so bored with that one, dude. That is like a routine work call that is just going to be incredibly boring. That's a painter. All I'm going to answer is questions about painting.
All right.
Yeah.
All right, let's get on with it, Brian.
Yeah, please.
After the shenanigans, we'll let you slide on the phone call. But I want to welcome everyone to Silicon Valley Impact. I'm your host, Brian Sparks. Over there is a good man, Brian Bernasconi. The purpose of this show is to have honest conversations about what it takes to build great businesses and communities so that you can make an impact within your own, which will be a t-shirt soon.
Within your own, Brian.
Yeah. All right, so on the show today, we have Tess. Tess, good to see you.
Yeah, good to see you.
The second you came in the door, the energy just went through the roof, and we started talking about random things, talking about you, studying for the show and your podcast. So we got a lot of ground to cover. And two things, usually there's multiple people in the room, but you and I are just going to geek out today on this, and we're going to have a lot of fun.
Yeah, it's going to be fun. It's been good. It's been, like a month since I've seen you, I think?
Was it the Femigrants we saw? Yeah, well, I've been trying to get you on the show for I think a decade.
I know, it's been a while. I know, it's funny. Someone just actually recently asked me about you.
Ooh.
Yeah, whatever you're doing is working. A lot more of the outbound marketing, posting, your events, things. And they were kind of like, hey, have you heard of this guy, Brian Sparks?
Yeah, go on.
And I was like, yeah. And she's like, oh, is he new to the vet? He kind of just popped up, and I was like, nah, dude, he's been around for ever.
Tell him, Tess. Yeah. Thank you. Well, you and I know each other for a while now, but our audience doesn't know who, may or may not know who you are. You definitely have your audience, but we're blending them at this point. but give a little quick intro about who you are and what you're working on.
Okay, so 20 years later. No, I'm kidding. It's in the moment. I'm Tess. I am a managing partner at FTB Capital Group. We are investing. Fund one is longevity, health, and wellness. So big picture, I'm an investor, but I'm also a founder. I kind of straddle that fence. I've, been on a startup before. I'm building things right now. And, it's interesting because being on both sides, a lot of people have asked me quite often, I'm talking with founders and they hear, I'm not just independently wealthy out of nowhere. Mm-hmm. And the background and how I got to where I am. They're like, well, what's it like, on the other side? The investor side, the fund, how's it running a fund or raising a fund? And I'm like, bros, it's exactly the same as a startup. Yeah. It's the same. It's tiring. It's stressful. And just as much responsibility as you have to your investors if you take investors on, and we're going to talk about that. Oh goodness. As a founder, I feel like a little bit heightened responsibility
from the VC perspective.
From the VC, from the fund management, from taking other people's money. Because when you're taking money for a company, for your product, right? You're saying like, I believe that this product's gonna change this industry, and this company's gonna grow, and we're gonna make so much money or whatever. Yeah. When you're taking investor money to invest in other companies, you're really saying like, I'm gonna try to outperform the market, like the open stock market. Yeah. Right. And I think that's a big take. And so whenever I'm looking at, I've done angel investing. I personally invested previously. One of my number one due diligence factor, would I write a check?
Would it come out of your own pocket? Yeah. Mm-hmm. Okay, so we had a lot to unpack, but I definitely want to. Before the show started, we were talking, and you're one of the few people who've come in here and said, "I've been preparing for the show," and you even posted about it, which I really appreciate. That was awesome.
You're welcome.
But people will show up, and I'll go, "All right, what are we talking about today?" And it'll organically unfold as the show will. But I'm curious, how did you prepare for the show?
Yeah, so I did watch a couple of your episodes because as much of a supporter as I am, I will say I hadn't really watched or listened fully because I've just been around you. We've been at conferences, we've been at things, and I've heard you speak there, and so I knew the quality that you carried. But I was like, okay, let's see the framework. What's the style? Is it very technical forward? Are we talking a lot about the products or the companies or just the style?
I would describe.
So I'm curious. Oh, can I interrupt?
Yeah. Go ahead.
What did you determine? What is the style? I'm curious.
I think it's definitely startup investment industry forward with fun.
Thank you. I compare it to the cheese derby overseas. You ever see that where they roll the cheese down the hill?
Oh,
and people just kamikaze go right after
it. Cheese wheels.
The cheese wheels, and then they tumble.
That's how you equate our show is to the cheese derby?
We just trot out one topic and we chase the cheese down the top. You just blew my mind. I go, we're talking about startup investment. That's the cheese go. And we're all just flailing down here.
Right. Just let the cheese fly.
Just let the cheese fly.
Yeah, that could be another t-shirt. Silicon Valley Impact. Yeah. Just let the cheese fly.
Yeah.
This is Silicon Valley Impact.
I love it.
Can't say it enough.
And so we're here. And thank you for coming. I appreciate it. Yeah, like I said, no, wait a minute. Okay, all joking aside, I have been trying to get Tess on here for quite some time.
I completely believe you.
You've been busy, and so I can't thank you enough for being here. I'm super excited to talk about how you really made the transition into the VC space. How did that evolve for you? But you've heard me ask this question a million times, and I ask all my investors and startups the same question is, what is it about this game, the startup ecosystem that you love so much?
Yeah, so my favorite part about it is seeing the new innovation of technology. Mm-hmm. So I think that to be really excited about investments and the venture space, I think you have to be a futurist. I really think you have to be excited about like what's going to be going on in humanity 50 years, 100 years after you're no longer here.
Yeah.
And so you really have to kind of think outside the box and really like change your frame. You have to be an early adopter. I love technology. So a little fun fact that I had to look up because someone else has asked me about just the different tools and things. And then when I tell them how much I love technology, I say, you know, I went so far to have AI introduce my podcast. The first 2 episodes of my podcast are done by AI.
Oh. Really? So what does that mean?
That's funny because just last week I was saying that I don't want to lose my job to AI introducing the show. And here we are. It's already happening.
It's already
I
happening.
might as well just resign.
Yep. So, and this was...
So I wish we could play that. Where can I find that? Can I find that right
yeah,
now?
Yeah, it's on Apple Podcasts.
Uh-huh.
It's called Her Stories.
Okay.
Capital HER, the TLDR of life. And what I was curious about is, you know how time flies and you're just like, when was that? So I was like, when did I do this? Because being a futurist, a lot of times you're an early adopter. Mm-hmm. So October of 24 is when I did this.
Oh, wow.
Yeah.
For a lot of people, this is all brand new, but you were, and surprisingly, you've had guests in here before talking about AI being around, 20 years.
Right.
Yeah.
Right. I mean, like I always tell people, like, people forget the OG Siri.
That's right. We took Siri for granted.
Yeah, she's just like cast out to the side.
I know. And then Alexa came along, and then then there was that battle. Okay, all right. So tell us really quick. I mean, you're a futurist. You've kind of played the angel investor, VC, startup. What got you into this? Like, did you grow up in a family? Where did you grow up? Did you grow up in a family who led the charge and introduced you to this? Was there a mentor? Was it school, a friend? How did it all start for you?
So my story is very, I feel like, uncommon. I'm not your normal into the investment space person. I, didn't come from a big traditional banking background. Mm-hmm. My family so I grew up in Florida. First of all, let's start there. I actually just came to the Bay about 4 years ago. Mm-hmm. Like, I'm still what I feel fresh. And so I grew up in Florida, very traditional household. Parents were in healthcare and had jobs. And so I was going to go to healthcare, and I did, and got the job and got, the 401k and did the investing and did those things. Along the way, I kind of had some trouble with my financial advisor. To be honest, I was like, so the financial advisor I had, they had this like pyramid, and they were like, okay, this is what you're going to do with your money. You've got to have the savings, and then you've got to have this, and then you're going to do savings for a house, and then you're going to save for your kids' college. And then I stopped, and I was like,
you're reading off cue cards is what you told him.
Yeah. And I was like, I stopped him. I said, I'm not having kids. And he was like, well, you don't know that. And I was like, excuse me?
Yeah, you took him off script. He didn't know what to do. Yeah,
he was like, well, you don't know. It could change. You want to do that. And I was like, no, I don't. But what if I want to take that money that you want me to set aside for, I'm not having a kid, but a kid's college fund, mm-hmm. and make it do better, make it go somewhere else. And so that was kind of like, I remember that like light bulb. That was a really big moment where I was like, so everyone's just like got this structure. And so what I tell people was like financial literacy. Mm-hmm. So I went through financial literacy as an adult, like on that path. And so when I found out about the 401k, I learned a little bit more about how they make your investments.
Wait, let me stop you right there so I can contextualize everything, because I find this incredibly fascinating. You were still in Florida. Mm-hmm. You had the corporate job, and then you realized the script that the financial professionals were giving you didn't fit your path. You then pretty much found your own pathway to literacy. And the reason why I'm kind of putting a pin in this is those who are listening, whether it's financial literacy or AI literacy, whatever it is, it's never too late, right? There's always like, take control and learn. And so you did that.
Yeah. No, it's 100% right what you just said. It's never too late. And as you'll see on my path, I've just always kept that mentality. And so it doesn't matter how old I get or what I learn. I know there's always so much more to learn out there. Mm-hmm. And there's nothing really stopping me. Like the creation of the internet, like mm-hmm. that. And, if you equate what everyone has with AI now. So now we have this new way to teach yourself. And so now if you use the internet, you use these things to teach yourself, there's no limitation. And so I started understanding like the S&P and how they, would invest, and decided to start doing some stock trading on my own, and started understanding stocks, and had a little, a couple people at work that were also doing the same thing. We would come in and talk about like, what stocks did you get today? And so from there, I actually, it's so funny, someone walked in at work and was like, I bought the funniest thing today. And I was like, what is it? They're like, it's this coin that's got a Shiba dog on it.
I'm listening.
And it's called Dogecoin. And it's just so funny. It's a joke. And I was like, what? And then I found crypto.
Okay. All right. So the pathway starts to unfold a little bit more. And so you taught yourself, again, financial literacy, but it just didn't stop. So you're still in the job. You're still in a corporate job. When was your decision to kind of like, I need to get away from this and I want to do something new?
So I went down the blockchain rabbit hole, and I started like really deep diving in on what that technology was, how it was created, what it meant, what it could mean, how people were using it. I did start buying stuff too, but at the same, instead of just buying, because, people said like, this is going to be the next thing. I understood, I learned more. I got in a lot of the, Twitter spaces, or X now. And I started really teaching myself. And when there's something that's coming out new, the faster you can learn it and then distribute that knowledge, then people will come to you and you learn more faster. Like it becomes this feedback loop. And you start to get, more information, and it's not so different, like such a big gap with, that's the thing that's really exciting about emerging technologies, right? Unless you're talking about something like, I don't know, aerospace science that requires you to be a physicist, like I'm not going to be telling you how to put a rocket in space, But when you talk about things that are easily learned on your own, and then you can, and for me, as soon as I get information, I have this really bad habit.
Going down the rabbit hole.
Well, no, it's actually with telling other people. Like, I'm not a gatekeeper.
I think that's actually one of your superpowers.
I do it, I do it now with VC. Founders will tell me all the time, you're not like any investor, any VC I've ever talked to. Like, they've never told me half the things you've said. And I don't understand why that has to be the case.
Wait, now imagine that, a VC having a value prop of sharing information. That's it. It's kind of, no, it's true. I mean, I think, but the real good ones are doing that now.
Yeah.
They're up there. I mean, we had Bill Reichert in here. He just loves mastering the art of the pitch. Getting to Wow, his book was really good. Essie Mawadi is constantly on stage, educating people. She's social media. Itamar Novik, another really great. I mean, they're constantly educating people. And so you're saying that this is kind of your pathway. And I think being a great teacher also requires you to be a great student. And this is what really had you absorbing this new, information, which was finance and financial literacy, to be more exact.
Yeah. So I found myself positioned at an opportunity to be like team member 4 on a blockchain startup. What was really unique about it was we were US based at a time when a lot of people were, building in other countries, and a little more sketchy. We were also fully, docs. We weren't trying to hide who we were. We were trying to work with the SEC regulation, and was a challenge being a US based company. And so we were actually trying to disrupt the VC space. We were
in the startup.
Yeah, we were actually trying to figure out how to use the blockchain to allow you to off ramp and on ramp, basically move your liquidity on the cap table. As you see, I always forget his name, but I bring him up all the time. There's a company the guy started where now you can get a loan on your portfolio, like on the investments you've made. So if you, because this is becoming as we had a lot of high valuations and a lot of people invest their money, it's locked up. And this is something that like, even, I know a lot of your audience gets this, but so many people don't understand investing into a venture. It's not like the stock market. You can't just sell your shares. Like, you're
locked in.
Yeah, you're locked in. So,
well, unless it's an evergreen fund, and then then the strategy does allow you to come in and out. But traditionally, you're right. A more traditional fund, you're locked in. So I definitely want to kind of because you have actually, going back to this idea of the value add, not only sharing your ideas, and I'm kind of going to leap around chronologically.
Yeah.
You've kind of taken this idea of sharing information not only to the stage, to your podcast, which we'll talk about, but you've also built a really unique ecosystem. Her Connection. Am I saying that right?
Yeah,
Her Connections.
Yeah.
.ai. Tell us a little bit about that ecosystem that you're building up.
Yeah, so Her Connections came about after helping launch Slave Ventures. So when I decided to come out, I have someone I knew that was raising a fund. I ended up being in a lot of the rooms with people here. I started making the connections here in the Valley, and I asked, what could I do? What can I do to help? And she said, venture partner, see what you get done. And I came out and just did the thing, and she, in her words, set the West Coast on fire. And she was very well connected, knew a lot of people, and she was getting calls asking if she, saying, "Hey, I met this person."
So let me get this straight. So your pathway to become, it's like you saw the path, and your gateway, so to speak, was to jump on board with someone who was doing it. They extended an invitation as a venture partner. You got in there and learned everything, much like financial literacy. You learned it all and start crushing it.
Yeah.
So what were some of the things that you learned early that high quality VCs do? And I'm asking you this not only from the perspective of an investor, but also the perspective of a startup, because I think a lot of times first time founders don't know the power they have, and finding investor fit is just as important as founder fit. So what are some of the things that you learned early on in your venture partner experience that you saw valuable?
So I saw that it's very easy to write a check and see people like write a check and then leave them be. So, it's interesting, that question, because so I tell people one of the things I would attribute to my success, and I'm going to use that like this because air quotes, because, we all have whatever our goals are or whatever they may be. I've hopefully a long life ahead of me, and I have no idea what's coming next. But we all define success differently is kind of my point. So I view being able to take out, a middle of a day and come here and sit with you and record this and be the master of my time successful to me.
Yeah.
But one of the things that got me to where I am is that I learn quickly from other people's mistakes. I learn quickly what not to do and what I don't like. At the same time, when I look at people that have done things the right way, I don't think that their way is the only way.
Yeah.
Does that make sense?
I'm totally tracking you. I'm big, just to kind of give an analogy to our viewers to stack the perspective. It's kind of like chess. You learn how the pieces move, and then you can look at the game from multiple perspectives and see different strategies to the pathway to winning the game. And that's the success, right? You want to win the game. You want to win at life, but again, winning and success is different to everybody else. And there's not only one pathway, but you can kind of start shaving off valuable strategies to then create this cocktail that works for you.
Yeah.
Yeah.
Yeah, I think it's a magic moment.
A magic moment.
Yeah.
Yeah. Brian, are you okay if I butt in here for a second?
Yeah. Tess, hold on to your seat. You ain't going to believe this.
We're talking about a lot of things here, but I just want to remind people that one of our very esteemed sponsors is Moralis HR. And Moralis HR is a human-centered recruiting firm that has executive search throughout the entire nation. They deliver curated, high-quality talent when it matters most. Within your own, Brian. And I also want to say that they do contract roles, they do temporary roles, they do permanent roles. If you're falling behind on hiring, you're definitely going to want to call Moralis HR. If you're frustrated with weak candidates or fake resumes, Moralis HR has the tools and the platform and everything that you need in order to succeed. MoralisHR.com. Thank you very much, Moralis HR, for sponsoring Silicon Valley Impact. That's it.
And out the door the ad fairy goes. Well done, Brian. And thank you.
sir.
Yeah. And thank you, Shelly Morales over at Morales HR for being a huge fan of the show. Okay. So we're here with Tess and we're chatting about how she learns, how she identifies the patterns for success, what works, what more importantly, what doesn't work, and doesn't buy into it wholesale. She takes a little bit of it and stacks it upon what she learns from others as well. Was that pretty much kind of like how you?
Yeah, exactly. Yeah, it's I feel like we see a lot of stories about the success part, and I know people coin this, and there's meme or clips and different things where people will show a graphic and they show the iceberg at the top, and but I don't think anyone really digs into the bottom. I don't think anyone really really gets into like what didn't work, or all they see is like what did work. And they don't, and not saying like focusing on negative is, I don't want to kind of go there because we
get dark here. On
I know. I mean, it's, as our human nature, we gear toward the negative. It's just a very easy thing to do. That's why, we have to have like positive affirmations.
So you want to geek out a little bit on some EQ stuff. You love this stuff. I love this stuff. And so I think what you're referring to is, we definitely look at the results. We celebrate the results. Even in Silicon Valley, we celebrate the failure because, okay, we can unpack the behavior to find something that may work for us. But really, there's that layer that you're talking about with insight, right? Where you can just go down to really the ingredients of what is creating the behavior. Yeah. Is that what you're kind of referring to? Yeah.
It's kind of like, and so the ingredients. So what you start looking at for me, and it's interesting because, the Valley is, I think, coined the disruptor, right?
Mm-hmm. Yeah.
Almost to a point that it's like, if you're, go great, what are you disrupting now? But, when you think about how things are created from like the industry, like how is this the norm? And you start challenging that. And so like my latest hill is that the biggest takeaway I have from the last years in this space is that the model is broken. The traditional model, it's not, I don't think it's sustainable for the way that things are going to become the way.
What is one of those high level? Because I hear that a lot. I've had a lot of people sit in that chair right there, VCs, investors, and they will say, well, it's broken. What are some of the high level, just generalities of the brokenness of it? Where do you think it begins? So,
okay, fun fact, I'm also an equestrian. I ride horses my whole life.
Do you have horse?
Not right now. I have not I've not gotten a new horse since I've moved. I sold I had 2. And I sold the last one around 21, I think.
Oh, we'll talk horses later. Okay,
are you also an equestrian, Brian?
Me, I love horses. Huh. I grew up. Okay, not a lot, but I've rode a pony or two.
Yeah. I'm curious. Yeah, Tess, do you ride somewhere locally? Do you? Where do you go?
Woodside?
In Woodside.
Mm-hmm. Yeah. Yeah. So it's actually ironic. I couldn't believe that.
Wait, that's on the water. Is that on the water?
No, Woodside Horse Park.
It's up in the mountains. It's up above Redwood City.
Oh, okay.
Mm-hmm.
All right.
Yeah, I'm actually, except for when I had horses on my own property, I'm closer than I was in Florida, actually. I was like an hour and a half from boarding in Florida. But, okay, so in what I ride is English. There's one division, it's called the Hunters. Okay, so if you imagine fox hunting, like fox hunting, you've seen it. There's a division that's taken from that sport, and there's it's a very objective judging. It's not based on time, or it's not like clear. It's very objective. So the judges themselves, like how they view your horse, and so I was talking to someone about this. The judges are the key to how we as riders show our horses. If the judges reward a horse that performs a certain way, that looks a certain way, then, and so for, the sport, we're not going to get into all that, but if the judge rewards things and we as riders see that being rewarded, we're going to try to emulate that. So just like that, when you have large VC firms, and and maybe this is because they're so big. But when you have people, the model was shotgun. When you have these large firms writing $100,000, $200,000 checks, because it's like a drop in the bucket. They can, they're larger firms, so they're going to write out, who knows, 200, 300 checks in a year. You create, and what it's done is created, and I've sat across the table from a founder that has told me this. You've created an industry for founders to literally make careers off fundraising.
Let that sink in. Okay. Because you think the playbook has become so clear to the founders, they just duplicate that and just rinse and repeat.
They every year, 2 years, they raise another 100, 150. And this is why, it's interesting. I always, ask, like, we talk about this as investors, and it's one of the main questions we ask, what are the funds for? What are the funds for? Mm-hmm. And I don't know where it breaks down, and I don't want to speak for that other side. It'd be great to hear, from a large fund manager, or, if they're allowed to even speak.
So let me back up on that. So what you're saying, how would they get funding again if the previous funding didn't work?
How many people fail?
Yeah, that's true.
And if you tried your best,
but you come back to me multiple times and you keep, striking out, I'm going to be like, I'm going to move on. I mean, I'd love to see you if you have an exit, but you may get once, possibly twice, but you're not going to get a third time.
I had, this is the playbook. I've had you show some traction, you get a 6-figure check from a VC, you go and you build and you try, and then it doesn't work. And then you kind of either like stack something different on top of that your next company. And maybe it's instead of the pivot. And I think this is kind of where some of that more hands-on relationship comes into play. Mm-hmm. Maybe it didn't start out to become so nefarious, and that's a big word to use, but I was shocked. Like, when I heard this, I was flabbergasted.
Yeah, no, I get what you mean.
Like, I was like, oh, so you just raise every year. And so then you have this narrative going around in the founder circles, like, you should just raise money. And then we wonder why no one wants to try to actually get revenue when you can just so easily go get a check.
Yeah. And so what you're saying is the playbooks need to be disrupted a little bit, and emerging managers and first-time founders should be the top of the iceberg, as opposed to those repeated founders who have gotten in this rinse and repeat, raise, fail cycle.
Yeah. I don't want to, get down on the founder that has raised and it didn't work out and you've got to go raise again. I just feel like at some point, you've got to become more creative. There's something different you got to do. And there's someone I saw, and this is like early when I got here, and I thought, you know what, this is very unique. And he gave me a big perspective, and he's actually helped. I have to look him up and thank him one day, because he's helped shape my idea of how we're actually going to be structuring our fund, and how things are going to be a little different. He was building an app, and he had an opportunity to acquire a business that was profitable. And the man was older, had no one to take it over. And so he bought that business as a way to, one, help bootstrap his company, because it was a profitable business. Mm-hmm. And two, the business had customers that were adjacent to who he wanted to release to. Okay,
you said my magic word, bootstrapping. I mean, we can unpack that a little bit later, but because we're on this right now, you're talking about your fund, you're talking about what works, what doesn't work in the previous kind of VC game playbook. But real quick, before we get too far beyond this topic, and for our audience, so those of you listening, gear up for this one. If you're a founder on the founder side, what is it generally that you would look for in a fundable company?
So I've been thinking about this a lot, and like I mentioned, prepping for this recording. I think that you're going to see seed stage and pre-seed and seed stage. We've already seen it move. Mm-hmm. And so right now I'm looking for some sort of traction, and if not, some sort of revenue. I think at the Fimmigrants we were at, I mentioned this, in this day and age of vibe coding, prompt coding, you are able to create an MVP. You're able to release something. You're able to test the market. You're able to get people to sign up for a wait list. You're able to get users. So, revenue is not always the answer. The other thing is...
So speed. I mean, you're talking about traction, but another thing is just speed to market. And I agree. I think we're in a cycle where speed is going to be key with things evolving so fast, because right now everyone's learning what the capabilities are for AI. Where's it going to go? In 6 months, maybe it may look a little bit different. So you definitely, I think you're onto something with this thing. I think it should be traction / speed to market.
Yeah.
Capacity.
And this is also obviously all industry dependent. If you have a industry like hardware or, this in aeronautics or something that's even in healthcare where you need the FDA approvals and you've got to go through human trials and those types of things. It's very capital intensive.
Yeah.
It's a little different. So those are different,
and you're in that space. I avoid it.
No. So
Okay.
the part of what even though we're in the healthcare and health wellness space, longevity, we're staying away from the FDA approval, the trials, because it is capital intensive. And so I also, from a belief standpoint, I'm more supportive and I want to really change the impact for preventative health. So the corporate role we mentioned earlier, I was in healthcare. So
it fits for you.
I think that's a compliment.
Yeah, no, it is. It is. You're there. So I got to go back just because I know we left our audience hanging. I definitely want to know about your ecosystem, her connections.
Yeah. So that actually was born out of the need when I was sourcing on the sourcing side and scouting for deal flow for Slave Ventures, the first fund that I was on. And I kept meeting founders who were not ready to raise, that didn't maybe need to raise, and they just didn't know what they didn't know. And so again, I found myself in this position where I have some information, they need it, and so how do I help them?
Yeah.
You said it fits for me to be in healthcare. I do have this deep rooted want to just help people.
Yeah.
And so that's where it all really comes from. It's like, how can I help them? What can I do? And so I started advising. I started, some people had never run a business, had never started. They didn't even know how to set up the best, structure for the company. Just the things that go into running a business, running a company. And so I created Her Connections for a few things. One, to be able to host events that brought these people together. Slave Ventures, we've focused on increasing the funding to female founders. And so I also focused on creating that space. So I actually made kind of a play for Her Connections. Everyone always thought it was it's a women's group, it's a female group. And it was fine. But Her actually stands for Help Everyone Rise. So
I like that.
Yeah,
That's good.
Yes, I have a special place and I do, care a little bit about trying to make space and have a little more attention given toward the underrepresented founders. And so I do like that, but I think everyone can benefit from, and I think it's also like the open and safe space, like I mentioned, a lot of things I say is the first time that a founder has heard that, and especially from an investor. And so I wanted to create that space. And so we have, events. It's a lot of people call it like a community, but it's not run like a community. I also do like my fractional work out of there. I ended up getting, people needed help and they were, okay. And that's the thing you learn quick, right? It's great to help everyone, but it's not about the money, like paying me. I do believe that people value more things that they pay for.
Yeah, I like it. And I love this idea of accessibility. I mean, as a VC, oftentimes they don't have access. And so if they have multiple points of access to you, it builds trust. And I've said it a few times and you've said it a few times. I mean, fit for you is like, number one, you have a history in the space that you're looking to serve. And I can't tell you how many times I've had great conversations with great people, very smart people who are investing, but they don't really bring in their previous life. I mean, maybe they may have a corporate experience, but they're more of an agnostic investor. you are going specifically after the healthcare industry, which is your background, and also sounds like your nature in terms of wanting to help. So that's what I mean, that fit there is perfect for you, and that will be very attractive to flushing out some of the really good, smart founders. I think moving forward.
Yeah, got it.
All right, Brian, you know what that sound is. Our little friend
of course
is.
I do.
All right, so I definitely have a few things to say, but I can't find. I'm being messy. I can't find my script right now, Brian.
Oh my gosh!
Stall him. No, stall him, Brian.
That was good.
Stall.
Thank you very much, Brian.
No, we're back in it. All right, so hey, I got to say this about Stack Ventures. All right, Ryan. So let me say this. Stack Ventures is transforming the real estate into full stack into the. Okay,
Wow,
I just rolled out of bed
Hold on.
this morning. Yeah. Take two.
Yeah, go ahead.
All right. Stack Ventures is transforming the real estate into full stack ecosystem solutions for the East Bay residency and global startups. Backed by Baring Capital, located into the heart of uptown Oakland in 1900 Broadway and 1950 Franklin. Stack Space has 2 towers. Actually, Brian, make that 3 now.
Oh, 3 towers.
Yeah, with over 1.7
3 towers.
1.7 million square feet of luxury living, event space, resort style amenities, and EV mobility, office space, and access to one of the biggest startup communities in the Bay Area. Check out stackspace.com. That's STAK, stackspace.com.
Great.
All right.
Fantastic. Well done, Brian.
See, sometimes you do got to make another run at it, Ryan. Yeah.
This is what I'm saying. Sometimes life's a little bit messy, and here at Silicon Valley Impact, we're okay with that. In fact, we fully embrace it.
I wasn't ready. Last week you weren't ready. Now I wasn't ready.
No.
That's okay. You're good.
All right, we're good.
We all love you, Brian. Everybody's
laugh
here
it
for
off.
you.
All right.
Yeah. We just can't say good enough good about you.
All right. So we're having a great conversation.
That's 10 minutes ahead, by the way. Oh, behind.
Thank you. So we're having a great conversation here with Tess. We're talking about what does it mean to disrupt the venture capitalist space. We're talking about why she loves this game, why multiple perspectives on moving forward is key. We're talking horsies and and all things the good life of the startup and Silicon Valley experience. So Tess, I got to ask. I mean, we've covered a lot. We talked a little bit about how your community helps people. Talk about how you're forming your fund. I mean, this is your fund one. I know there's a lot of emerging managers out there right now that are looking, okay, what can help me kind of get in the game? Not all of them. I mean, you said it earlier. A lot of them are like founders. They don't even get, into the game because they can't raise or they hit some sticking points. What have you found to be helpful moving the needle for what you're building?
It's been an interesting market. For as tough as fundraising is, we do have a lot of emerging managers, and I almost feel like it's interesting because I think what you're going to see is there's people that are going to be really niche specific and really industry specific and able to give a lot more support. And so, as we mentioned, I have a background in healthcare. The first fund I was on I don't think we were in healthcare at all. We were very traditional tech, AI, AR, VR, but it allowed me to learn the ropes. It allowed me to learn the different things and get that experience. And so I always wanted to come back around to healthcare. I also always wanted to come back around to things I truly believed in and things that I want. We spoke earlier a little bit about my financial literacy and me not having children. So I have a very intentional purpose in life to impact the world and impact a generation.
Yeah.
Legacy is something I believe in, and we can make it in many different ways. And so I really believe in preventative health. Working in the healthcare space, I saw, that side of things, and I want to be able to support prevention.
Yeah.
I want to be able to support that. And so one of the things that I believe is healthy founders make healthy companies. I looked around and I thought, why are we glorifying being burnt out? Why are we glorifying, these founders just working 80 hours, 90 hours, 100 hours? And I didn't understand from the perspective, like I get, we want you to be committed. We want you to, care, be passionate. This is the hill I'm going to die on because I've got to solve this problem because it's important to me. But from an investor's standpoint, if you burn out and you quit, I just burned my cash. So I'm like, this doesn't add up to me. So, one, I care about people being, able to sustain through building a company. That's one of the things I talk about with founders when we talk about VC money, and they don't understand when people say you're too early, and I sometimes advise like against it or question. Make sure it's what you really want to do. It's the path you really want, because as a venture fund, you have things that you have to do. You have a fund timeline, and I explain this, and this is as we mentioned, the things that they don't know, and it's not hard knowledge to find. And so one of my big things is I think founders need to educate themselves on some of this stuff. But if you have to exit by a certain point, you're going to get driven, you're going to get pushed, we've got to move you. And so, that's a very high stress pressure cooker. Okay. So let's say that's what we're going to function on. Why, if you burn out, if you quit, then that money is gone. And that's the old model. The old model is I have, this much money in my fund. I'm going to invest into this many companies, and we know most of them are going to not work out. And those companies are people. Those companies that don't work out are these founders. And there's this disconnect from them. It's like they become faceless. So
you're looking to really provide them not only the resources they need to launch, but also sustain. So you're looking for that, again, that full cycle experience from a VC, and that would be your value add.
Yeah. So we've created an actual plan, an accelerator. I've created a way to teach them how to actually build the business they're building, and teach them, but also give them that space. Again, I think this is back to that, the people writing the checks are setting the tone of the culture.
What are some of those high level topics that go into helping people accelerate?
So it's your traditional, go to market, there's traditional product market fit, along with how do you start your mornings? What's the first thing you do? So
calendaring, like making sure your day's balanced with, you talked earlier, I don't know if we were on air yet, but you talked about getting that workout in, spending time with family, walking the dogs. There is that moment where you need to back away and balance it. So you start there.
Right. Exactly. You've got to, you have to keep that time, because you've got to reset. You've got to allow yourself, a lot of building companies is creativity. And it's really hard to be creative. A lot of solving problems is creativity. It's hard to have that. So when you have a founder come up to you and they have to close down because they couldn't find product market fit, or they couldn't find, whatever the problem was that was inhibiting their company to grow. Is there a chance that if they were able to think more creatively, they had that space, they could have solved the problem?
I totally agree. And I think the fact that you're saying that, and we're talking about on the show, and in the context of accelerating a startup, you're giving them founders permission. Hey, look, you need to take a break. It's almost like, if I'm going to invest in you, you need to mandate this. And I love that. Because there are the traditional, insights on go-to-market, legal, back office, whatever it may be, accounting. But you are bringing in this unique element that makes all the difference in the world to be more productive throughout your day, the week, the month, the year, and however long this marathon lasts. Because if you're constantly grinding, you're just spinning your wheels.
Right.
It's almost like keeping your foot down on the accelerator when the engine's smoking. It's not going to do anyone any good.
Well, yeah, right. It's not going to help, and if you burn out. So the way this comes off very kind of like feely, touchy, like, oh, woo woo, like, well, wellness, but when you talk to investors about it, and I let you know that yearly we estimate about $12 billion is being lost in portfolios from burnout.
Yeah.
Now you're speaking language like, do you want to de-risk your investment? And instead of, trying to teach someone at the end, a lot of founders, a lot of business people, if you notice when they get into longevity or wellness, it's always an exit, when they made it. or they get the funds or they get the time, or maybe they don't make, whatever it is. If you do it from the beginning, what kind of company could they build? And it's a bit of a thesis, I guess, come see me in 5-10 years.
Yeah. I mean, I think this is, it's all in marketing, right? I mean, a lot of people will talk about in Silicon Valley, the power of the failure. What, Brian?
Oh, I'm listening to the conversation and shaking my head because, in my opinion, quiet contemplation, reflection, downtime, those, as much as I don't really want to make this a blanket statement about everybody in Silicon Valley, but those are not necessarily highly valued moments in our lives. I mean, if you're sitting doing nothing, I think that you get maybe somewhat criticized here in Silicon Valley.
Yeah. Oh, for sure. And
if you're taking time off.
Yeah. But yet we'll talk about the failure. We'll talk about, we'll use the word burnout occasionally, but take a vacation.
Or take a walk.
Well, they'll take a meeting and a walk and talk.
Yeah.
That's becoming cool.
Yeah.
But
you just have to have a cool name for it. I think when you go for a walk, you just have to have a cool name for it.
What do you call between rounds in a boxing? I mean, it's just between rounds.
Yeah, I don't know actually if there's a term for that.
Between rounds.
You have a timeout in other sports.
Yeah.
In my business, I sell real estate. If there's a room set aside for something like this, I call it a contemplarium.
Ooh.
Yeah, which I think we should all have a contemplarium.
Yeah, we need to market this. We need to push
contemplarium. Yeah. Well, I mean, it's one of those things where a lot of in previous investment theory, you shied away from solopreneurs, right? And one of the big reasons was because of the workload. Mm-hmm. So I do think, not to set myself up guess what? But because I didn't plan it this way, obviously, but I see the opportunity. This is poised perfectly at this timing because there are so many solopreneurs coming with the advent of AI, with the advent of this agentic.
Oh, so now's the time.
Now's the time to, set them up correctly. Now's the time to give them that support. Now's the time to help them, and so we have more people building things on their own. And if we expect them to perform at a certain level, and that's the thing for me, if you look at the site, if you look at things, I call it's performance. It's not wellness. It's not this nice to have.
I like that. There it is. There's the gateway. Nap time is performance time. If you ask me. All right. So again, you're putting together this accelerator, providing a lot of the traditional insights that help, but you're also integrating the health component, which again is in line with your entire life thesis, if you ask me, which is amazing. But I got to ask, with all this kind of coming together, how you're helping people, helping founders, what's next for you?
So that's the Pacific Standard, the Performance Accelerator. It's launching in August. I've got a wait list right now. And that is my main focus, along with some fun things to be determined and to be announced. And
then how does someone get involved? I mean, say there's a founder listening to this and they go, "Ooh, I may not get in the first one, or maybe I could, but I can get in the second one." How do they get involved, and how long does it last?
So it's an 8-week. It's an 8-week accelerator. We did a lot of research. We've done a lot of discussion about the length of time. It's actually interesting because the stack real estate that you have, that's basically the vision I have for it. I'd like it to be run in person that way. But so one of the things we have along with it is an actual proprietary formula to predict burnout. And so we have an assessment, and it's going to touch base with you throughout the accelerator, and it measures, your sleep, your amount of hours you're working, your fundraising, what kind of runway, all these different things go into it. And then it spits out a score and lets us know the intervention we may need to take. Again, my big thing is let's prevent and not react, not treat. So we have an agent, Cove. That's my little, it's going to help me run the accelerator. He's the founder 24/7 support. And he needs to get out there. We need the data to start getting some more data in. So we're launching virtually first to just get it out, get it used, and start fine tuning that formula.
Nice. Okay.
Yeah.
So a lot upcoming. This is coming up in August. Is there somewhere people can go and learn more?
Yeah, PacificStandardCode.com. That's the website.
Okay, so you go check that out, see if that's a fit for you. And so you're launching the accelerator. The hope then is those who start to show results from the acceleration, you can provide capital or some other related. What's kind of the next step after that?
Yeah, so accelerator is a great deal flow source and also support. Then after that, we definitely have the capital from the fund, if that's the best suit. So I'll give you a little bit of a sneak nugget. I talk about it with people too. It's not super secret, but what we're working on is the other piece of the funding mechanism and how things are going to be set up, because as I mentioned, the traditional venture model needing to change. There's a hybrid between venture and private equity.
Oh, you're teasing us. All right. Do we get some insight on that?
That's the future.
Or we can come check out your podcast where you're talking about it all the time. What's the name of your podcast?
So I've got Answering AI along with Joe Vasquez. So that's the one that we are answering. So that one is so there's two. So Answering AI with Joe Vasquez. Joe is a 4-time Emmy award-winning newscaster. And we were talking, and he's like, Tess, I live in North Beach, and Waymos drive by my house every day, and my neighbors are afraid of AI. And I was like, no, they're not. That is ridiculous. Like, they're in San Francisco. Who here is worried? And he's like, I'm telling you they are. And so it became this, like, we need to talk about it. There's a lot of people with a lot of questions. There's people that aren't in tech, the people that aren't, where you and I are. So we created that to be able to help decipher and talk about some of those things. And then her stories, the TLDR of life, that's getting relaunched, and that's on Apple Podcasts, and that's talking with female founders and investors. That's using to shine a light and show a lens on the woman experience through the startups.
Wow.
So,
okay. So you got a lot. You got a lot going on in order to help the founder thrive. You educate, you position, you inform. There's a lot going, and you're taking the stage more and more. Is that?
Yeah. So I think a couple years ago or so, I was on the stage heavy. One of the big things I talk about is transforming your skill set into the technical world. So as a non-technical person from a non-traditional background, again, sharing that knowledge, telling people how they can get into tech without being, technical, and translating the skills that they don't realize that they had.
Yeah. Would that be your TED Talk? If I said to you, in 5 minutes, I got a spot for you to do a TED Talk, what would be your go-to topic?
So my TED Talk would be navigating the game of humanity in this wild, crazy world we call life.
What would you share with us?
I'd listen.
Yeah, it's.
You like that one, Brian? Yeah.
I mean, that's a topic for all of us. That's universal. Everybody, not everybody, but almost everybody has some struggle with that in some way, shape, or form.
Yeah, I think there's a unlock. Again, I can't wait to come back here and sit with you, because I can. We need some time, more time we could have. But the EQ, the self-awareness, this journey that you can go on in life.
Yeah.
And once you understand that you can start and hit that reset button at any time, it unlocks a really fun, really cool
and
thing.
that's what you did. And we kind of had that full circle moment where it's like, that's how you got started with I need to learn more, and it unlocked a whole nother world for you. And so whether it's a choice, right, a curiosity, a failure, a pivot, a crisis, whatever it may be, whatever has you going in another direction, it's never too late. And it's an unlock opportunity.
Yeah, it's never too late. And just because you stop doing something doesn't mean you can't restart. So my pod, Her Stories, 2024, 13 episodes, it's set cold. And I'm pulling it back out. And because it needs to come back out, I'm sure you've seen Alex Hormozi says, go past 21 episodes in a podcast and you're already in the top whatever percent. Because most people just don't even get that far.
Brian.
I know we are consistent. We have consistency. We got a track record. We're coming up on 100 shows. We've been doing this 2 years, and I think that we win for that.
We win. So I got to ask you, Tess, before we're running short on time, but how can people connect with you, and what's kind of a win for you today?
You definitely connect with me on LinkedIn. I read all the messages. I reply as soon as I can. And then I'll tell you pretty much my go-to is going to be to give you my link to book onto my calendar. I believe, everyone's worth 30 minutes. So I try to do my best and give that. And then my when, I hope that someone watches and listens to this and decides to do the thing.
Do the thing. Well, Brian always tells them to watch and subscribe. So
I do.
Yeah.
Do the thing.
Do
That
the
would be
thing.
the thing for us, is to watch and subscribe and tell your friends.
Within your own.
Yeah, within your own, Brian.
All right. Well, Tess, I want to thank you so much for being here today. Brian, always fun. Glad to see you back on your feet.
Just a little Silicon Valley remix there for you, Brian. Yeah, you froze. You went deer in the headlights.
All right. Well, again, thank you everyone for joining us today. And we'll see you all soon. Be safe.
Thank you, Brian. Great show. Thanks, Tess. Thanks for coming down.
So fast. I can't get my agent to work. It's so you're in.